You are listening to Keystone Stock Talk Show, episode 239. If this is your first time listening, then thanks for stopping by. This podcast is produced every week for your enjoyment, and show notes are found at www.keystocks.com. Come back often, and feel free to add the podcast to your favorite RSS feed or on iTunes. You can also follow us on Twitter at Keystocks and on Facebook. And keep submitting your stocks via the usual social channels or at our website, keystocks.com, for our Your Stock Our Take segment. And we just might review your stock in an upcoming show and let you know if it is a buy, sell, or hold. We're extremely excited to be back with you again this week. It is our predictions show, our 2024 predictions show, where we review our terrible 2023 predictions and take a stab at 2024 just to see if Brennan can raise his rate above 10%. All right, let's not delay. Let's get to the show. I'm going to bring on my co-host, Mr. Aaron Dunn, and the Killer Bees, Brett and Brennan. How are you guys prepared for Christmas, heading into the new year? You all ready?
Yeah.
Nope, not even close.
No, neither am I.
I'm ready.
How about Aaron? Has the shopping been done, Aaron?
Yeah, I don't really do much of the shopping.
You're going to ask Gab, right? If the shopping's been done. Yeah. It's true. Brennan, Brett, shopping?
Oh, yeah. Yep.
You're amazing.
I still have one more gift to pick up, though, just because I was on the phone with my mom the other day and I asked her, what would top off her garage, basically, because she likes woodworking.
Nice.
And she gave me a hint, so she won't expect it this year, but I think I'll get it for her.
And you have that gift like just sitting there just in case you get a special lady by the end of the year, right? It's just still sitting there, and you'll give it to her.
My head's in the books right now. Yeah,
that's impressive.
Studying.
Yeah, you guys are studying.
You guys both take your level 3 at the same time, right? Level 3 CFA.
Yeah.
We said we'd never talk about that again.
That's okay about us talking about it. That's actually one of my predictions, is that I'm going to fail it this year and Brett's going to pass it. So
Really?
No, that's not.
It's a way for him to bet on himself, right? Yeah.
I'm just joking.
You're predicting that Brett's going to fail and you're going to pass?
No. Brett's going to pass.
You're predicting that you're both going to fail.
My first prediction before we get to is the mugs are coming. Mugs are coming. I think that'll come true. We're going to be giving away some mugs for some of our best.
Well, there's going to be a point where I just go on strike until I get my mugs. So
that's true. Aaron Dunn will not be on the podcast until he gets a mug. I think they're coming very shortly. So since this is the last podcast of the year, and we still may get you in. And aren't you in Hawaii for the first week? So
yeah,
that'll be nice.
Yeah, you'll get a mug by the time you get back, filled with something special for you that we pour right now and just let sit in the office. All right, well, let's look at, I was going to just do a brief introduction here. I'm going to share my screen, brief of some of our coverage over the course of this year. Well, I thought I'd do a quick coverage review. Of course, this is our 2024 predictions show. Let's look at one of the best performing stocks in all of Canada. Happy to report that Hammond Power, one of our Canadian small cap focus buy recommendations, was the second best performing stock on the TSX this past year. It was basically the best performing stock all year until the last couple of weeks when a Bitcoin farmer somehow passed it. Good on Bitfarms. But if we take a little bit of a wider view here to see how truly great a performer Hammond Power has been, if we look over the past 2 years, Hammond Power, the best performing stock on the TSX over that time. Now, if you look back just to look at Bitfarms again, just back 2 years, Bitfarms is actually down over the past 2 years. So best performing stock last year, if you owned it 2 years ago, you're still down. If you owned Hammond Power 2 years ago, you're up 588%. Let's look, what was the best performing stock on the TSX over the past 5 years? Well, we're familiar again with that name. It's Hammond Power. So it's been a tremendous gainer for us. It truly game-changing for portfolios. I pulled this back for a second to show you too. The bottom company there, Cipher, was actually a company that is in coverage as well. So that's over the past 2 years, that's 2 of the top 5 performing stocks on the TSX. It's excellent to see. I also noted that if you look back to the top stocks over the past year on the TSX, Firan, which is a focus buy, with 13th overall. 2 recent recommendations were in the top 25, and we've got 2 income stocks in the top 40 with gains of 50%. So, well represented over the past year, and I had to say it was a good year for our research. There was also a company acquired over the past year from our Canadian focus buy portfolio. That's H2O Innovations. They were acquired by a company called Ember for a significant premium. As you can see there, that the day that occurred, the stock was up roughly 50-60%, up 75% for the year. And since we bought that stock in 2019, or recommended to clients at $1.16, bought out at $4.25, that's 267% return. So that's what we're looking for. Get those excellent exit points for clients in what was a good company that executed to its plan when we originally interviewed the company and recommended it just over 3.5 years ago. I wanted to also just tease you. We've got some upcoming research coming out. This should be released today or tomorrow. It is Keystone's 2024 Cash Rich Profitable Canadian Small Cap Report. What it is, we do statistical analysis on 60 stocks there. They were pulled from us looking individually at the balance sheets, the MD&As, the financial statements of over 3,500 stocks in Canada. That's basically every stock in Canada. We're looking for strong balance sheets and current profitability from operations. We've got 7 cash-rich recommendations from our Canadian small cap buy portfolio and our Canadian small cap discovery portfolio, including 2 new buys that were added over the course of the last 3 to 4 months as we were going through this research to compile this report. We've got 7 cash-rich top-tier monitor companies that we're looking to potentially add to our focus buy portfolio or discovery portfolio in the next 1 to 3 years. And we've got 8 additional micro caps. These are cash-rich micro to nano cap companies, 50 million market cap in Canada or less, and they're profitable and cash-rich, and we've added them and done individual reports on those companies as well. So look for that report in the next couple days. We're also putting together our 2024 Canadian Dividend All-Star Report. The 2023 one combined essentially looks at the 2024 will also look at every dividend stock in Canada or income producing stock in Canada. It's 400 plus. We use a rigorous criteria to find the companies that provide best value in terms of capital appreciation and dividend appreciation. We look for dividend growth stocks in this report. Typically, it contains around 12 to 17 income stocks on the Canadian market, and we provide data and smaller reports on 20 to 30 stocks from our monitor list as well. We're also going to look at a 2024 U.S. growth stock report. We're just starting the research on that today. We're looking roughly screening through 10,000 companies or more with a market cap of less than $1 billion. It takes us down to about 2,000 stocks with strong revenue growth, profitability, and good balance sheets. That's what we're looking for, and we'll be searching through those. The goal here is to discover the next great growth stock or stocks with a similar profile to some of Keystone's past very successful recommendations, including Boyd, Hammond Power, or Expel. Look for that by the end of January. All right, well, that's going to provide the intro to this section. I'm going to quickly look at where we were last year. You guys ready for that? Your predictions over the course of this
I already
past
know
year.
how they turned out, so.
You already know.
Yes.
You
At
looked
least how
ahead.
my predictions turned out. Well, I mean, it's not hard.
You read the end of the book, basically.
I made the predictions and I follow the news. So,
do you actually? What about the other guys though? Do you remember their predictions?
I reviewed them.
That's good. I'm going to give you quickly our scorecard. 2022. I had 3.5. That's what I have written here. I'm not sure how I got half. 3.5 out of 4. Aaron had 3 out of 3. Brennan had 1.5 out of 5.
What?
Brett was yours. What was yours?
Oh, mine was flawless. I had 100% correct.
100%. I think he was 4 for 4. That's what I thought. I said he had, for some reason I say 5 out of 4, but I don't know what that doesn't make sense. But he did tremendously well last year. That's all we remember. All right, let's get to, I'm going to talk about my first prediction, and then we can kind of talk about that. I had stated that AI, or artificial intelligence, will be one of the more discussed themes of 2023 as more and more use cases are imagined, flushed out, and realized. I believe this prediction should be 2 out of 1, in my humble opinion, given the fact that AI was one of the biggest focuses of discussion, not just for the financial markets, but for humankind in general over 2023. Now, you let me know if I know I get 1 out of 1, but do I get 2 out of 1?
I give you 0.5 out of 1.
That's weak. That is
Just
so
because it was about the easiest prediction anybody could have made at that
I
point.
don't, was it
I don't think
in
at that
December?
time. Yeah, it was December. It was right after ChatGPT.
Yeah,
just
first
after it
launched.
came out.
was
So,
released in
But
November.
it was prior
so.
to like the big stock market boom.
prior to
Okay.
All right, I'll
the
give you 1. I'll give
Thank
you 1
you.
out of 1.
It's
So
Not
you're
2.
saying what I hear is 2. Okay,
No,
thank you.
no,
Thanks.
No.
But yeah, no, it's we'll give me 1 on that one, because we're not going to give me 1, I don't think, on the next one. Housing prices, I predicted, will continue to fall. A significant decline in North American house prices in 2023. I'll tell you what my theory was. While other assets sold off ruthlessly in 2022, housing was up 6.46%, which actually it held up really well relative to other asset classes, which, there's a bear market in crypto. There's a bear market in the stock market overall. The NASDAQ was down 35%, 36% in that range. I thought that the fall would be given to the spike in rates, and it would cause homeowners at the margins to sell as variable interest payments became too expensive, and coming mortgage renewals were at unworkable rates. That would trigger some sales. Now, the rate hikes in 2022, which were late and then aggressive, should have had a lagging effect, but we didn't see this. I think what went on here, I think it's twofold. What I did not see was that in Canada, where variable rates are taken more widely and homeowners typically reset faster than the US, it's 1 to 5 years versus some longer terms in the US. Now, we chronicled this through the year. Big banks extended the amortization terms from 25 to 35 to 40 plus, in that range. This was entirely unanticipated and gave homeowners some breathing room. In a sense, with a 40-year mortgage, you're quasi-renting. As rates reset, homeowners at the margins will eventually face the reality that they cannot afford their homes at current rates. But there's nothing like our financial system to just kick the can down the road. They're hoping, kind of crossed fingers, that when homeowners renew their mortgages, they may be either in a better position somehow, or rates would be lower. But I do not foresee anything close to, say, sub 2% that many bought at, and they had little wiggle room at that time. So there may be still some trouble looming here. In the US, it appears that homeowners just did not sell, as their locked rates are far superior to any rate that would they'd get after a sale and a rebuy. So the supply was way down. Now, in my opinion, the strength or lack of weakness has more to do with the continued asset or hard asset price inflation, because the affordability generally in housing remains on the decline. And the biggest move to level this would be a declining housing prices. We still haven't seen that. But if you do look at housing prices moving into 2023, like the move for housing prices this year, like housing was up slightly this year, about 3 to 4% in that, depending on what you look at. We look at the S&P CoreLogic Case-Shiller 20 City Composite Home Price. That's the largest title I've ever said. But that, if you look at relative to what my prediction should have been, that the housing market would not go up relatively as high as, say, the S&P 500. The S&P 500 is up 24%, the NASDAQ up 44%. So relative to those assets, housing underperformed. At just year to date, it's about 6.5. And if you look over the past 12 months, about 3.9 only housing was up. So I should have said that would have been the correct call, that housing will lag other assets, primarily the stock market. But I didn't say that. So that is a 0 out of 1 on that. Any thoughts on the housing market, gentlemen?
No,
I mean,
just that it was interesting uncovering how the amortizations on variable loans in
Yes.
Canada were just really being extended. And, you mentioned 40-year amortizations. A lot of people are on infinite amortizations.
Yeah.
I mean, their payments aren't even covering the interest payments. So, if rates come down over the next year here before they renew, then maybe they get, some reprieve there. But obviously this is a situation that is unsustainable. So
Yeah, you'd think that there's more pain coming still, but I mean, like, because that's one of my predictions from last year, and it was, I mean, I'll go over it, but I was completely wrong. But maybe there's a lagging effect still that we're going to see. I don't know. I mean, supply's low.
it just really depends, like what happens with interest rates in 2024 and what happens with the economy, right? I mean, if
Totally.
the economy enters into a recession and interest rates don't go down fairly significantly, then yeah, a lot of people will, I've also read that there are a lot of mortgage renewals coming up in 2025. So, that would be a big year to look at as well, depending on what's happening with the economy and rates.
Now, my final prediction was that there would be more companies taken over from our cash rich report than in the previous year. Now, what I punch myself in the face over this about is that, and I know this, it was a better time for acquisitions over the course of this year, but the financial markets generally are stupid, so they buy when the markets are flush or where you're at highs. And last year, over the course of last year, there was highs. So there was 6 companies taken over from our cash rich report last year in 2022. This past year, there was 2. Now, it's still great to find those companies within there, but it's less because there was less M&A generally. It would have been smart to buy them this year. Like, that should be the prediction. You should, or it just should be the statement. You should have been buying companies when they were depressed at the start of this year. Instead, many of those companies were bought in 2022 in the start of the year at a significant high. And then as they rose over the course of or as they were bottoming at the start of this year, they were not bought. And now we'll probably see more M&A activity, or M&Ms maybe in my stocking, but we'll see more M&A activity if the markets continue to rise this year, as more cash may be easier to get. But again, that one didn't work out as well as I had hoped. But to be honest, it was more of a recommendation. There should have been more companies taken over at the start of this year, and that didn't happen. I would believe that over the course of this year, there'll probably be more of the cash-rich companies in that report we're just sending out this week will be taken over than last year. So that could be a prediction for this coming year. All right. Any thoughts on that, or you guys want to just move? We got a lot to go through.
You're 1 for 3 so far?
Again, the first one was 2 out of 1. So that's 2 for 3 in my math. So
okay, keep going.
It's impressive.
Let's see how low.
No, I'm done.
Oh,
that's my predictions. Well, we had one about your love life, and I of course nailed that one. So I'm 2 for 4. I'm
this
2 for 4.
This year. It's okay.
It's true.
2020.
Yeah,
So
you
we'll
actually specifically put that you weren't going to make a girlfriend prediction. So you did not get that. Yes.
Oh, but then I doubled down and said I will, and he won't. That's it. So, bottom line, let's look at Brendan's predictions. First one was about airline pricing, right?
Yeah. Can I share my screen? Can you unshare?
We don't really want you to, but you're gonna anyway. So
yeah, I'd like to share my screen. So my first one was that my first prediction for 2023 was that airfare pricing is going to become more reasonable in 2023. And so to track my prediction, I used the St. Louis Fed Consumer Price Index for the average airline fares in U.S. cities. And my thesis here was essentially, just seeing the strong airline inflation since the pandemic and airlines investing in capacity with the increased demand. I thought that airfare pricing would begin to normalize back to pre-pandemic levels, which in November, the index was at 280.5. And while it did increase briefly at the beginning of 2023, it has continued to moderate back to pre-pandemic levels, where the index now sits at 250.3, down 11% from when I made my prediction. And if you do look at the chart in comparison to 2019, it has actually fallen back to its pre-pandemic levels. However, a side note, if we were measuring airfare pricing flying out of Saskatoon, I think that the opposite would have probably been true. Prices for tickets wouldn't have went down 11%. They probably would have went up 30% or something like that, since Air Canada ended up pulling out a lot of flights.
That's if you can get a
Although,
Yeah.
anecdotally, your flight, because Brennan's coming to town. We're going to be at the
Mhm.
World Outlook. Myself and Aaron will be speaking. That's a good segue. And on February, what is it? 3rd and 4th?
First,
Yeah,
isn't it?
3rd and 4th, I think. And your
second
flight
and
was half what it was last year. So, Brennan, look
Well,
at that.
See, I'm not the guy
prediction.
buying tickets, so I don't know. But anyways, okay, so that's my first one, and I would say that I was right there. But I mean, that was just my play on inflation coming back down. My second one, not so hot. So I said gold will perform well in 2023 relative to other asset classes. So my thesis here was just, with interest rate hikes, inflation remaining at somewhat elevated levels at beginning of 2023, the fear was in the market. I thought that gold would perform well due to its safe haven properties. And I said that the Gold Miller recommendation from our coverage, as well as a pure play cash rich gold miner recommendation from coverage, would also do well. So while on an absolute basis, gold did have a good year, it was up about 10%. But relative to the S&P 500, which I said that I would base it off of, it actually underperformed. So my prediction was wrong. It was wrong here. But I will say the Gold Miller in coverage is up 30% year to date, which is awesome. And the gold miner is now down, but during the year we indicated to clients to take some profit for about a 45% gain. So we did actually sell some of that position. But overall, I was wrong. I should have just said gold will have, a great year on an absolute basis rather than a relative basis to the S&P 500, which it did underperform. But it outperformed bonds, or 20-year bonds. Any
You should
comments?
have stopped at gold. Gold will perform well, or compared it to the TSX, S&P TSX, which was up only
Yeah.
about 7%,
Yeah.
and then you would
You're
have
too
looked better.
specific, Brennan. If you want to
Brennan,
be an expert
yeah.
forecaster, you have to be as vague as
Just-
possible.
Yeah,
And
that's what
sort
it
of-
sounds
Interpret
like.
anything is
Sort of
This is
mumble
bad.
too, so you can say, "Well, I know I did say that."
This is a good segue into my next one because this is pretty precise that I went, and it's funny. So I said, because of elevated interest rates, I believe single-family residential housing prices in Saskatoon will decline 6% to a median price of $380,000. I couldn't have been more wrong here. Did exactly the opposite. Housing prices in Saskatoon went up 6.5% over that
Wow.
period. So
Mm.
yeah, I mean the market's been robust in Saskatoon. I believe it's kind of the same in Calgary. But yeah, I couldn't have been more wrong there. Any comments there?
You should have said 6%
Yeah, I
on
think
the
it's
absolute.
obviously it's regional. I think that prices are down. Certainly,
Yeah.
single family in Vancouver year over
Mhm.
year, probably about that amount.
Yeah,
Although I'm not 100% certain.
and again, I would echo my comments about what is kind of allowing that to happen is the extension, because nobody's feeling any pain yet. So I mean, and yeah, it sucks to feel pain, but
Yeah, I was considering
then-
doubling down on this prediction this year, but without being as specific.
Go for it.
But I
Yeah.
don't think I'm going to. We'll see.
All
Okay, so
okay,
then
number 4.
my last one is.
So what are you at right now? What are you at? What's your
So I'm at
scorecard?
1 for 3. 1 for 3 so far.
Okay.
So I said this summer my golf game is going to improve, and I'm going to break my summer 2022 record game of 83 on the course behind my house at Wildwood. Well, I was sort of right, or at least that's what I keep telling myself. All I could do was tie my record of 83. I did, however, shoot an even par on a 9-hole stretch for my first time ever on this course, and I even had
At a
an
mini
eagle this
golf.
year.
Yeah.
No, it's the course behind my house. So while I may not have beat my course record, I certainly think that I improved. I just need to work on my consistency maybe a little bit. So I think that I deserve at least a half point here. I tied my
1.5
83.
out of 4. Is that what we're going for?
That's all I'm fighting for. Yeah.
That's what, Because
And,
Brett wants you to get to 2, so one of his predictions can come
Yeah,
true.
me
Right?
too.
He's like, I vote for 2. I vote for 2.
Okay, and
Uh,
that's my predictions. I didn't do
Nicely
too swell.
done. Well, we'll review. I think we're looking at Aaron's now. That was
Let's
a
look
teaser
at
there.
prediction number 1 here. What did I say? I said inflation continues to decline through the first half of 2023, with month-over-month figures down significantly. The inflation rate will approximate the Bank of Canada's 2% target around May, based on the extrapolation of recent month-over-month inflation rates. So I showed basically what the inflation rates were doing at the time, and I just extrapolated out till May, and that brought us down to kind of about 2.5%. And on this, I'm going to give myself a flat 0 out of 1 here.
Although inflation did decline. We'll give you that.
It did. And I was
Mhm.
considering like arguing for a quarter point or something like that, but I was pretty specific in the whole, like, 2% around May. So I was completely wrong about that. I mean, it
So
did decline. Not
Are you
to the
taking your
extent,
own
but-
advice this year and being less specific in your prediction?
I was one of the things that I said at least 3 or 4 times as I was making the forecast is that this was a very bad forecast.
Yeah,
It was just I was just extrapolating a bunch
because
of previous data, and I was telling people don't trust this forecast. It's very bad,
Mhm.
and it turned out
it
to
would be
very-
impressive if it even went down to like 2.7%, but then you still probably wouldn't be right? That's the thing. That's very very
I think if
specific.
it was at 2.7 by May,
You give yourself.
then I would have given myself full points. But like we're still at like I mean
Not
I think
me.
we're around like 3% or something now, and it's
Yeah,
almost
yeah.
the end of the year. So
Yeah.
so yeah, I can't really argue that I deserve any points from that. I mean, if you guys want to be generous, give me a 1/5 of a point or something.
We'll
but
see
it's
how
not
well
gonna-
you do on the other ones,
Yeah,
and
not
we'll
gonna
see how
help me
bad
here.
we feel.
Yeah.
Right?
Okay. So next prediction number 2 was central bankers will begin to announce interest rate reductions in 2023, likely in the second half of the year, once it's clear that the rate hikes have started to slow the economy. The central banks will react to decrease interest rates. Well, on this, I mean, even though technically we aren't at the end of the year, I have to give myself another 0 out of 1. This is a very bad prediction. There's absolutely nothing right about it. We all know that central banks did not reduce rates so far in 2023. And since there's no meetings planned before the end of the year, that's not going to happen. They were increasing rates into the fall, into October, I think was the last one.
Mhm.
So, yeah, you guys want to argue in favor for like a half point here?
Well, we might go back to half point on the other one now. If
Yeah.
Yeah, we'll see.
Because you're
we'll see.
thinking I need it, right? Is that what you're
Yes,
trying to
that's what we're saying. We're trying to
Yes,
be
exactly.
charitable.
It's a charity point.
We're in the spirit of
You're
giving,
offering me
right?
here.
We're
You're
close to
offering me a
Christmas.
charity point.
Yeah.
Okay, so prediction number 3, stock markets will enter another bull market in 2023, possibly starting in the first half of the year. This is linked to declining inflation, central bank responses, markets reacting positively. You want to know what? I think that here I almost think I deserve a half point, because there have been, even though it's not been a widespread bull market, there is certainly a major recovery in the technology sector. We've seen, somewhat of a bull market over the last month, more broadly based.
If we just
this
use
is
the
not
US
bull market
index.
I predicted
Yeah.
though. What's that?
If you just use the US index and knew nothing of the fact that it was
Yeah.
7 stocks, like it by
I could
that
say
definition.
that was a bull market, certainly.
Yeah.
Yeah. But then like almost all of that return is concentrated in 7 stocks. Now, I think over the last month, it's a little more broad,
It
but
has
it's
been.
not the bull market I predicted. So, I'd say I deserve between 0 to a half point. I gave myself a yellow circle here.
Half
What
a
else
point.
did
Kinda
Half a
indicate
I
point.
give you a 1,
Half a
honestly.
point.
Come on.
Yeah,
I think you should
could
have a 1.
Get a 1 too.
One
Then
point
we're
for
not
that
being
one.
generous. We're not going to give you the 1 on the first one, but we're
No.
going to give you
So
1
I'm
full on
just
this
getting
one.
1 out of 3. Yeah, I mean, I
Yeah.
think however you slice it, that's fair. I got 1 out of 3. I certainly, I think that one thing we can agree on is that generally speaking, my predictions were absolutely horrid.
But you were 3 out of 3 last year. So,
There you go. Yeah.
yes, it's
Yeah.
true.
So
All right,
anytime
on to
you ask
Brett.
me about my ability to predict, I just focus on
Yeah, well,
Might-
like
might
I
go
said,
up.
predictions are for losers anyways. We're just doing this because everybody wants a prediction show at the start
And
of
that's
the year.
basically every time I made
And
a
we're-
prediction last year, I said this is very bad.
We're
Don't
also a
ever
bunch of
trust me
losers.
when I
so-
make predictions.
So, but Brett made a smarter bet on inflation with
Yeah,
his first prediction, right? Like this is the more general, right? Like
This is
'cause he's
more
materially
general.
lower.
Yeah, so I did actually in my comment say a step further. So I predicted inflation will be lower. And I said, I expect inflation to be around 3% by the end of 2023. The last was 3.1%, and economists actually expected 3%. So I think I just deserve that one.
Yes,
0
you
points.
definitely get a point.
Where's your crystal ball?
I did actually specify 2 to 3.5% before you start arguing there, Aaron. I got you.
No,
I
I'm
planned
joking.
ahead.
No, that's
Okay,
you
one
were
for
quite
one.
close. And that's why I was reviewing the past everybody's predictions, and that actually stood out to me. I'm like, oh, he was actually quite close.
That's impressive.
I mean, it reminds me of that study they did where they had chimpanzees throw darts at a board of stock symbols, and yeah.
So you're saying he's the
No, I'm
chimpanzee,
joking.
right? Is what
Obviously,
you're
I'm
saying? Yeah.
I'm more of an orangutan, actually.
Yeah.
All right, so going downhill from here.
Yeah.
So I did say SBF or Sam Bankman-Fried, the former CEO founder of FTX, would be convicted and sentenced to more than 20 years. The sentencing hasn't happened yet, so I'm even off on timing. But he was at least convicted. So
Yes.
however you guys want to make of that.
Half point.
Well, yeah, I'm convicted, but I mean, it becomes a full point. We'll review this next year. It can become a full point at the end of next year, I would say.
Yeah.
Right now-
I don't know about that. This is a prediction.
Oh, it
for
has
this
to be
year.
within this year.
Yeah.
You forgot the wheels of justice run slowly.
Yes, I know.
That
was
yeah,
like-
that's true.
And that's what I noted when I was reviewing that. I'm like,
Yes.
you're probably right,
Mhm.
but it just a sentencing is going to take a long time. I mean, I don't even know if
The
You're not even
sentencing's, I
done
think,
that year.
February or March or something now.
Yeah.
And so at the time when I wrote this, the initial trial, I think, was meant to be like June or something like that. It was meant to be mid-year, and then it got pushed into October. So that's more what I was thinking. And then we see sentencing around November, December. But obviously that was early. I'm fine with a half point there. I think that's
That's
reasonable.
like those forecasters that we say that say the markets will crash, and then 10 years later they crash, and the market's gone up 400% over that time. Say, see, I was right.
right
They went down 20%.
the whole time.
Yeah, I know. It's like there has to be some little timing. No, it's not that. You're not that
If
far
only you
off.
listened, you'd be up huge in the last 3 months. Of course, down huge
Yeah.
over the year, but or 2 years.
Okay, so your third was about Chinese equities, right?
Chinese equities are going to continue to fall. I said mainland and ADRs, which they trade on American exchanges or any other exchanges, depository receipts in general. Shanghai index was down, so that's their mainland. And then Hang Seng, which is actually in Hong Kong, but it's effectively the same composite of your ADRs, was also down. So there you go.
Wow.
Shanghai was down
Full point.
6%, and
Nice.
Hang it was a bit more.
Does
Oh.
Brett have 2.5 out of 3 here?
Yes.
Yeah.
Whoa.
Yeah.
Except
Whoa.
the next one.
Whoa.
Wait a minute. Hold on.
Yeah.
I don't know.
Hang Seng was down 18%. I checked it earlier. I just forgot the number. All right, then moving on. Major Canadian and American indexes will finish up 2023 after a harsh 2022. And I further, of course, making myself then incorrect because that on its own would have been correct.
Yes.
I said this was a half point add-on after the fact as well. That I said the Russell 2000 would be perform better than the S&P 500, which it did not.
Ooh, no.
So what
Negative
do we-
2.5 points, I think.
What do we get
On
out of
that
that? Is it half or for the
He
first
gets a
part?
half
Or?
for that.
I think-
Yeah.
Yeah,
okay, good.
I specifically put that as an add-on as
Negative
Yeah.
half.
Yeah,
over
then half.
specific. Yeah.
A negative half, right?
And the last prediction, you just went wrong.
Was the worst prediction I
Your
think I have
horse.
ever made,
You bet on the
and
wrong
was the
horse.
stupidest thing. And I honestly, after that, you should have fired me. I
Yeah.
predicted Brennan's predictions would be over 50% correct, and
That's a
obviously
bad
that was
prediction.
completely wrong, and no one should have ever even thought that was going to be the case.
No,
That's
No.
a bad prediction.
sorry. So what did you end up with there? 3.5 or out of
We'll go with
I
3
can't.
because half
3.
point on the SBF, half point on the
3 out of 5.
3 out of 5.
Predictions
So,
are for
I think
losers.
that's-
It's
I
true.
think he wins, doesn't he?
and I will. You actually asked.
so.
I'm going to point this out, even though you said specifically in the podcast you wouldn't hold us to it. Bitcoin price prediction.
Oh yeah.
Oh yes.
Brendan said under 15K. Aaron said flat, so 15 to 20K, and I said above 20K. I was right again. Best
Ooh,
predictor. My
Winner,
coin flips are
winner.
better.
4 for
chicken
6.
dinner.
4 for 6.
That's impressive.
That's-
I just
Coin flips
abstained
are
on
better.
that.
We're gonna have to take a look at that coin.
I abstained on that one. Yeah.
Something sketchy about it. No, that's good. Those were
Well done. We should put up a round of applause. Brett won this year's prediction
job, Brett.
show. And I've won it every year, but we can't go back and verify that. So that's it. Aaron, you're going to start our predictions for this year, right? Is that where we're doing
Sure,
it?
why not?
These
I can do
bold
that. I can do
predictions for the course of this year that will undoubtedly come true. 100%.
Well, if history is any judge.
What I will predict is that though you should get your hands on those reports that we talked about earlier. That is something that you should look at.
Me?
There will be some good companies in there.
I'll do that.
You and you alone should get your hands on those, Aaron. No one else.
Okay. So my predictions here. I'm gonna double down on the rate cut prediction here. I'm gonna be specific about it because I think just saying rate cuts in 2024 or starting to cut in 2024 is just too broad. It's not, So I'm gonna say specifically prediction number 1. Bank of Canada and the Fed will start to cut rates in Q3 of next year. And
so not the second half even, just in that
quarter. In that specific quarter. Q3 is going to be where the
3
first
months.
rate cut happens, right? Just basing that on the trajectory of inflation in both countries. So if you look at inflation in Canada, it's traded down a lot, of course, really starting to ramp up around the summer of 2020, hitting a peak in June of 2022 at about just under 8%. And then since then, it's just been consistently sliding down, and it's right now hovering just above the range of between 1 to 3% for the Bank of Canada's target. So any lower, and it's right back in the range. And if it looks like it's going to trend from there, they're going to have to start cutting. So we've definitely seen some impact on the economy in Canada. I think that this is a fairly safe bet, but we'll see. In the US, inflation really going about the same path. It actually peaked a little bit higher, around 9%. And now it is trended down to about the same range, just over 3. I think it's about 3.5%. Now, economic data in the US has not shown the same weakness as we've seen up here in Canada. Still pretty strong. So they actually may be behind us. Canada may cut first and then the US. But in terms of, where inflation is, obviously it's pulled back a lot in both countries. And that should indicate that we'll start to see some cutting sometime soon. Prediction number 2 for 2024. I'm predicting another revolutionary advancement in AI released during 2024 and a continuation of the AI arms race. Now, me saying a continuation of the AI arms race, we can just basically ignore that because, of course, that's going to continue to happen. I don't think you need to be a great forecaster to figure that out. But what I am really predicting here is that there's going to be another major advancement in AI in 2024 that's announced and released, similar to the release of ChatGPT in November 2022, something that just blows everybody's hair back, right? So, of course, November 2022, OpenAI releases ChatGPT, completely changes the landscape of artificial intelligence. It certainly makes it more mainstream. And then since then, we've seen all sorts of things happen, like AI being integrated into search engines, into other types of software, office projects, new models being released by OpenAI, by Google, by Meta, open source models, Google really stepping up to the plate and releasing a lot of new things like the Palm 2, Duet AI. And just recently in December, they released their Gemini models. Now, Gemini Ultra, the biggest model, isn't out, but apparently this is very competitive with GPT-4. And then there's rumors about OpenAI releasing GPT-5 in the near future. So I think it's going to be something, not just an incremental increase, but something that's really going to be like another step up sometime in 2024. And then prediction number 3 is that dividend stocks will outperform in 2024. So when I say dividend stocks, we can classify dividends as dividend growth stocks, and then just, dividend stocks, which are your traditional kind of maybe higher yield, lower growth companies. But really dividend stocks that don't have a significant growth component to them have not performed well over the last year. Now, we could look at, like, say, a 5-year chart. We can look at a couple sectors that are synonymous with this type of dividend stock. So there's the REIT index up here in Canada. Good performance after it bottomed out in 2020. That peaked around just before the summer of 2022. And since then, really poor performance. So we have not seen a lot of interest in REITs. We could say the same thing with utility index. Basically, anything that is seen as mostly a yield play. But I think that as rates start to come down, what that's going to do is that's going to put more people in the long-term bonds, which is going to reduce long-term bond yields. It's going to make a lot of these companies look more attractive. Furthermore, most dividend stocks that are of the low growth category are going to have higher levels of debt. So with the assumption or the impression that interest rates are declining, that will be a net positive for most of these companies. So I think that they're going to have a better year in 2024. Whether or not they outperform the market is really just depends on a lot of things. I'm not necessarily predicting that, but I think that they're going to have a better year in 2024 than they did in 2023.
I like it.
Nice job. Yeah. Overall, I think a takeaway there, an actionable bit of advice for people listening are, there could be a significant, opportunity in great dividend growth stocks that have been kind of thrown out with the bathwater in this trade where you're looking at higher interest rates, that being negative for dividend stocks. There's some great companies, and Aaron is putting together a dividend all-star report right now. And, there's going to be a couple companies in there that I would predict that will perform very well over this year. Part of it just getting back to where they should be, and then, growing as they naturally do every year. So, I think there are some opportunities there, particularly when you do see a rate cut at some point. I think the market then suddenly shifts, and it typically happens fast, which is, you would not think that in a steady dividend growth stock. But if the sentiment shifts and everybody thinks suddenly, oh, these have been on sale, it'll happen fast. So positioning yourself now, if you think that's a trend this year, over the course of the next 2 years, is the right thing to do. And it's always the right thing to do to buy a good quality dividend growth stock. To be honest, it may be an opportunity right now that we haven't seen in a while. It kind of has been this fall. Like you saw in those charts with the REITs and the utilities, they have come up from their lows of this fall into winter. So it's already starting a little. It may continue this year. So you want to try to get ahead of that. All right. Who did I say? Did I say Brennan? I guess we'll go with Brennan because I'm going to end it off. Sure. Why not?
Yeah, I like this. I like the segue too because
get this over with.
Great minds think alike. Me and Mr.
Brett's
Aaron
not
Dunn.
making predictions this year?
No, he is. Brett is, but we're trying to get Brennan over with.
We're not letting Brett make predictions because he did too well.
Yeah, he's too well.
That's true.
Too good. So yeah, this kind of goes in line with what Aaron just said. So on an absolute basis for 2024, I predict that utility stocks will perform better in 2024 than in 2023. And I will measure this with the BMO Equal Weight Utilities Index ETF, or ZUT on the TSX, which was down 11% in 2023. Now, again, this reiterates what Aaron kind of was saying, but what underpins my prediction here is seeing that we are getting some dovish sentiment from the Fed on where rates will go in 2024. And if we do see interest rates go down in 2024, we will see utilities who tend to have higher debt level or levels of debt pay less interest on that debt. And we'll also see high yield dividend paying utility stocks become more attractive in comparison to bonds. So investors may bid them back up a bit in the year. So that's number one. Any comments, or I can just keep cruising?
Yeah,
Keep
you're
cruising.
predicting that historically bad year, it'll be better than that for that sector.
See how I did it
nicely
this
done.
year on an
Even my
Yeah,
absolute.
nicely done.
See how I did it this year? Yeah. I'm going for
You're
that
predicting
title.
a dead cat bounce, basically.
Exactly.
No, I'm just kidding. I'm kidding.
With some.
There's some logic behind it.
Yeah, there's
I
some
get it.
logic behind it. There's some brain cells going to work. So number 2 here, I believe small caps will outperform this year, primarily due to the large value gap between the S&P 500 large cap and the S&P 600 or small cap. Ryan showed this chart quite a few times. It's from Yardeni research, just showing the forward ratios and the valuation discount of that's being applied to small caps right now. So based on this, I'll measure the relative performance of the S&P 500 and the S&P 600 index. And again, I believe that the S&P 600 will outperform this year. I know Ryan's going to have some good comments on that when he kind of goes through his own section, I believe.
Brennan stole my prediction.
I didn't steal your prediction, but they were kind of close. And last but not least, this is a bold one, but I thought that I would swing for the fences because it's fun. On an absolute basis, Tesla, TSLA on the NASDAQ, will decline during 2024 from its current price of $256.50. Now, this is a bold prediction, but here are my thoughts. Number one, Tesla's profit margins have been declining as the company has been reducing the price points of its vehicles, basically to continue to push out volume, essentially, which we have seen other competitors basically surpass their volume now, surpass Tesla's volume. As well, number 2 here, high interest rates are currently impacting EV demand, with expectations for 2024 to be modest. As even Musk said on Tesla's earnings call, I just can't emphasize this enough, that the vast majority of people buying a car is about the monthly payment. If interest rates remain high, or if they go even higher, it's that much harder for people to buy the car. And finally, we are seeing significant competition coming in from Porsche, Mercedes, etc. Even my beloved Subaru has dropped the internal combustion engine WRX STI in 2023 to focus their efforts on a new all-electric sports vehicle. So we're really seeing, competition, even a smaller company like Subaru going full force with EVs. So that is my thought, and we'll see. That's a big bet. And I guess, I'm going to actually double down on my golf game this year. This is just my fun one. I'm doubling down on breaking 83 at Wildwood. You heard it here.
Are the lessons
Breaking
finally going to
something.
become useful?
Yeah. So yeah, that's my predictions. Any comments?
Amazing.
Perfect.
Okay, someone else.
I predict that you'll
Get
not
0
get
right.
half of them. Yes.
Yes.
No,
As long as we
one of
find
them
some
better
good
be right,
recommendations
basically. One of
for
them
clients.
better be right.
Maybe
Okay.
the one
All
you
right.
stole from me.
Yeah.
Yes,
Close.
he stole one from me and one from Aaron. That's
not how it
nicely
worked.
done. And then his golf game is
Had
all
to-
right. No, it was good. All right, Brett. Now, no pressure here, but
Yeah, reigning champion.
yeah, reigning
Going for the
champion.
2-time.
Everybody write these down quickly.
Yeah, write these down.
What does
They
Brett
are.
get as
and then
champion?
burn them.
Yeah, never listen to my predictions. My coin flips can only be
Disclosure.
right one year in a row. All right, though.
Mhm.
First one up, I am saying oil using the West Texas Intermediate, so WTI, will remain below $90 for the year.
Ooh.
So entire year,
Can't
we're not
go-
going to see not a cent
can't even
over if it's up for $90.01 for a minute.
Intraday even.
No, not intraday. We're doing days close.
Close. Okay.
Okay.
We got
Negative
it. We
oil
got it.
futures, I don't trust those intraday
Yeah.
prices. And so that nice and easy number one. I'm saying this because the OPEC Plus, specifically the Saudis, have already really played their hand of cutting their oil production. We're seeing U.S. shale production just keep on going up. So I really think it's just not going to have that same effect that we saw in early 2022, where it goes up to that $90, $110 a barrel. range, even if it was a relatively short period of time. I think it's going to stay below the 90, even potentially go lower if we see the OPEC plus repeat of the 80s, where they just try to crush US production by ramping up their production. It could really shoot prices lower even. I'm not counting on that. That's what I'm saying. It's just going to be below 90, not going down to 30 or something like that. But below 90, we'd have to see a super strong economy, I think, especially in China as well, because they've had weakened demand overall there. So overall, you need a strong global economy, which I don't think is going to happen to the degree which is necessary. As well, I think we could even see further increased production.
So I would say then, energy stock investors, beware. The man who won this year's prediction contest is saying that oil will be flat or maybe weaker. And if you're invested in those companies, make sure they have strong balance sheets, because you could be in for a wild ride.
Exactly. That's why we love strong balance sheets.
Yes,
so moving on to number two. So I'm saying 70% of the S&P 500 companies will have a positive return for the year. And I'll actually ask you guys a question here. How many companies in 2023, at least up year to date, had a positive rise in price for the S&P 500?
Like what percentage of, or
25.
just how many? Yeah.
Yeah, what percentage of companies, either or?
25%.
Yeah, 120,
Percent?
190. No, I'm talking about
120%.
companies on the
Companies,
500. Yeah, companies.
He's saying 18%. There you go.
Oh,
Yeah, there you go.
I don't know. I'll go 30.
You guys would actually, I'm surprised by this too. I ran the numbers earlier today, and I think it would have been very different last month. 62%.
Well,
Okay.
Oh, well, see, it probably would have been, and that's why
Yeah.
we were trying to go. We were kind of hedging it, right? Because, you know, yeah. Because at one point, it was a significant number or lower. It probably crossed over because it was flat. So if you just went above, yeah. Honestly, that makes sense, to be honest. It should be above 50% because
Yeah, I think when
we ran those numbers, they were about, in November, it was about 2%, 4% down, I think. The other 493 stocks on average were 4% down, but it shifted significantly November and into December. So they, you may have a 5-8% gain, but that means that likely it's like 60% of them are up, right? Yeah. Okay. Makes sense.
Yeah, no, it's changed a lot over the last couple months, because I think I ran the similar thing a few months ago, and it was like 30% or so were positive. I don't remember the exact numbers, but yeah, it's changed a lot. So moving on to prediction number 3, the US Fed, specifically the US, is going to have a soft landing, meaning that there's going to be no substantial increase in inflation, as well as there's not going to be a recession, and we'll go with a technical recession. So 2 quarters of GDP contraction, if we want to be specific with that one.
betting on the soft landing. Wow.
Yeah, the soft landing.
It's kind of a soft dump. That's what they call it in hockey.
Yeah.
Soft dump in.
Yeah. Dump and chase.
The puck lands softly
Oh.
in the corner.
All right.
Thanks, Coach Urban.
We'll move on from his specifically no Canucks prediction so far, which I'm guessing is going to be coming up. Speaking of hockey, no, nothing.
We'll see.
We'll see. Okay, he's not showing his hand quite yet. So moving on to my 4th prediction and final prediction. Like theirs, somehow Aaron read my mind very specifically. I almost did the dividend stock, but then I went more specifically and went with Canadian REITs will perform well in 2024, specifically over 5%, and we can use the TSX REIT index for that.
Yeah, great.
5% on an absolute basis,
5%,
or 5%
absolute
relative overperformance.
Absolute. So it is going to go up 5%.
So it needs to just be over 5%.
Yeah.
Including dividends?
Not including dividends. We'll go capital. I'll make it a bit harder.
Okay.
So yeah, no, that's my last one.
Yeah.
The winners for the year.
Nice. Okay. Let's get to mine, and we can close out this show. I'm going to double down, so to speak, on my AI prediction. I believe this is a year where the real shenanigans will start. It'll be silly season for promoters. That'll accelerate. There'll be a plethora of TSX Venture AI stocks. Market participants in these areas should beware in 2024. At some point, it will get really silly, and there will be AI stock podcasts, dedicated AI stock sites, conferences dedicated to AI stocks, and I will predict specifically 10% of TSX Venture companies will include themselves as AI stocks. They won't be, but it'll say they are AI stocks. So when I'm going through CEDAR, I will have to bring out at least 300 stocks that have AI in their description of the company. So that's a specific prediction. Does that make sense? Is that criteria specific enough? Okay, if I can 300 by the end of this year.
I'd say a great example of this is Vigano, which Brennan did earlier this year. It's
already converted?
Yeah, they converted and they got delisted. Yeah. So they are no longer trading, and that was after a couple months.
So they will not be one of mine.
They won't be one of yours unless they file. You never know.
Yeah, that's
Keep
good.
Dropping like flies. Keep dropping.
Mm-hmm.
Okay, the next one's a simple call, relatively. It's Brennan again. He stole this. Is to say small caps will outperform in 2024 after a number of years of underperformance. For me, I would say too that the issue here is though not all small caps are the same, so it's kind of hard to define them. And a broad or traditional recession is actually usually brings in a risk-off trade, so it's not good for smaller companies. So there's a risk of that. I'm going to say value-based small cap companies will outperform in 2024. I will use the MSCI US Small Cap Value Index, which captures small cap US securities exhibiting kind of value style characteristics. It tracks them by essentially by three variables. That would be book value to price, 12-month forward earnings to price, and dividend yield. So I would say those will outperform this year.
Yeah, I just want to say that I didn't steal that one, and just remember who sent you that research report.
And I'll refute that and say.
So you're saying Ryan stole it from you?
I'm saying that Ryan stole it from me.
Wow.
Yeah.
That doesn't bode well for that prediction then.
Well, I disagree to disagree.
Track record, I don't know if that's the wisest choice, but whatever.
All right. Now, number 3, housing prices will finally start to decline in the second half of 2024. Rates will eventually reset. They are hoping for lower rates, which homeowners will renew at. They may indeed be lower, but I do not foresee anything close to the sub 2% that many bought with little wiggle room. There may be some trouble looming here. It's a risky prediction, I believe, because, again, we talked about this. We shouldn't underestimate the Canadian big banks' creativity in solving homeowner near-term mortgage cash crunches. We could start to see 40 to 55-year mortgages. I'm not saying that's going to happen this year, but I'm sure banks would prefer those to foreclosures, particularly in Canada. In the end, this type of action, this is kind of a soapbox I'm going to say here. It's a systemic problem. Politicians I see this a lot, politicians and financial policymakers are taking kind of a role as caretakers, or more aptly put, in my opinion, they're like enabling parents, perhaps well-intended at times, and at others, I'm looking at politicians when I say this, just acting in self-interest, but in the end, not allowing the natural system to take hold. Contrary to what we have seen for over a decade, it's okay for the economy and individuals to feel a little bit of pain. It sucks, but it is how we learn. Perhaps we will think twice about buying the second boat or car or the 7th TV or extra 1,000 square feet on your house, things that really we don't need. It's our system's natural course of action to keep this silliness or excess that leads to real problems in check. For example, as tough as it may be to hear, those that bought too much house over this period with little margin of safety may have to sell, take a loss, and get less house or move to a more affordable area. This is a lesson learned. It's tough, but it can prevent a worse scenario. I do not see those lessons being learned today, and household debt in Canada remains at all-time highs. These are not good things. So that's a little bit of my soapbox. I just think that we should allow lessons to be learned. There can be obviously a social safety net. I'm not saying that. And everybody will say, oh, it's easy for you to say. I just believe that you need to teach these things. And sometimes it's a hard thing to say, and it's a hard lesson for some people, but it prevents catastrophic economic events. Any comments on that?
For you to say.
Yeah, well, it's not exactly like, negative amortizing or You guys getting after it.
Yeah.
But yeah, it's not like, I mean, the 40-year amortization mortgages are, good for the consumer. Like, I mean, it's just like you're literally not even paying down any of the principal. Like, like it's like, when people need to understand that too, where, when the bank asks you, do you want to extend? Don't just, oh yeah, my payment's lower. You gotta see what's actually going on. Anyways.
Yeah, and if you're in your 20s, 30s, even 40s, and get like a 25-year mortgage and try to accelerate and pay that down, you might be 45, 55. When suddenly you don't have the biggest payment in your life, it comes out of the equation. You paid off your mortgage, and then you can spend more in the economy. If you're going to take 40 years, if you're 30 and get a mortgage, you're 70. You're too tired to spend by then. Like it doesn't leave, it's not good for the economy overall. If you can't spend, you have excess income if you cut out that payment you paid off your mortgage. And that's I'm not a big fan at all of 40-year mortgages for what it does to an economy. Mm-hmm. And it's my opinion. I think it's pretty sound. Finally, a couple general predictions. One about AI as well. There will be more deep fakes. It'll become more of an issue in 2024. There will be one or two significant incidents that hopefully we'll learn from, but it will become something, or somebody will get fooled very significantly in 2024 by a deep fake, and it'll become more of an issue over the course of this year.
The sad thing about deep fakes and fooling people is it's one thing to say like, well, people will learn their lesson, but I think that a lot of people don't want to learn their lesson.
No, yeah, that's true.
That's a problem. Like, I've literally seen examples of deep fakes fooling people when there's been like a decal and a message on the video, essentially saying that it was a deep fake. Mm-hmm. Right. And so it's almost like if you're fooling somebody, especially when it comes to like politics or social issues, if you're giving them something they want to believe, even if the evidence is there and it's easy to spot, they still are going to fall for it because they want to fall for it. It's a sad thing, but I agree. I think that there's going to be a lot of that this year, especially because there's a big election, obviously, in the U.S. presidential election.
Yeah, that's a good prediction.
So it's going to be fraught with that kind of thing.
Yeah.
My favorite so far.
That's
it's interesting.
Part of my eye was on that partly, but I would say that people don't learn lessons often when it comes to money. There's some types of people that just don't learn any lesson when it comes to money in a lifetime. I mean, for example, that much of the TSX venture has been a deep fake for about 30 years, to be honest. The stocks on there, and people just keep going back to it, the horrible companies on there. So let's just say a lot of people don't learn their lessons, and hopefully they can, but I would predict that some event will happen this year that'll be widely publicized. It'll be a deep fake. We'll all hear about it. Hopefully it becomes a laugh, not something that's traumatic or terrible, but I would prefer it to be a laugh, but we'll see. There'll be a big event this year. And I'm not going to make any Canucks predictions because didn't I say last year I wouldn't or make any Canucks predictions? And it's worked out fairly well. So because the team is actually playing well, I'm just going to shut up about the Canucks and hope that they continue to play well. I'm going to predict, though, that we're going to be watching when we go to Vegas for the conference. We're going to be watching a game there, which means Vegas has to make it to the second round. So I think they will. And of course, now they're going to play Vancouver in the first round, and I've just bet against the Canucks.
Which I hope
probably I'll say that's a good idea, and maybe they'll beat them.
That comes true. Either that, or the Oilers make it there.
Oh well, if we're there and we get to see the Canucks in a road game against Vegas in the second round in the Stanley Cup playoffs, we will lose it, and we will be wearing Canucks gear, and we will probably take some blows from Vegas fans, but we will punch back. Aaron, we will punch back, won't we?
Well, the good thing is that, I mean, like, are most of the fans that are watching, are they actually from Vegas, or because Vegas is such a?
It's true.
Like, it's when we local town, right?
When we went to the playoff game there last year,
from Vegas who would go, but
there's
so much.
There's tons of people that go in and say they've never, that they've never watched. Like, I was actually talking to this one guy from, I think it was Wisconsin, I don't know, or something like that, and I don't know how he's never watched a game, from being from Wisconsin, a hockey game, and it was his first game, and he was just it was in the second period, it was 0-0, and he was like, "This is the most boring sport ever." And I was like, "It's not usually
Really?
like this." And he kept talking to me.
Oh,
and
it
not,
was a boring game. It was a
yeah,
bad
it was
game?
just a boring game. It was just a.
And then you
game.
punched him out.
No, and he kept talking
No,
to me, and I told him, I was like, if you, I mean, you can talk to me, but like, look at the ice. If you're gonna continue to talk to me, like, you're gonna miss the goal. Of course, he missed the goal when he, should have been watching, and he was talking to me. Anyways,
He missed the goal, but he finished his 5 beer in that period.
yeah,
True.
yeah.
Or that was you. Sorry. What am I talking about?
No.
No, it was. Well, we look forward to going to a game when we're down there. Hopefully, we got to go last year. Hopefully, that'd be awesome if they're playing the Canucks.
Mm-hmm.
That's going to end off our year. Again, the mugs are coming, so get your questions in for Your Stock, Our Take. If you've got any predictions, maybe we'll read them to start this year. Anybody got a prediction? The best, let's just say that. Anybody brings in the best prediction gets a new, brand new, what the hell, mug,
Yep.
Keystone mug, and we'll send that off to you for the best prediction for this coming year. As always, but I'm going to especially say too, I'd like to thank the guys for being on the podcast with us, all of us together this year. Wish you guys a Merry Christmas and a Happy New Year. And I'm going to wish all our listeners out there Happy New Year, profitable holidays, and as always, a profitable stock market year. That would be good. But anybody, I was going to end it off, but you guys might have something to say too, so I don't want to end it off.
We're good.
I was wrong.
Merry
They
Christmas,
have nothing
everybody.
to say.
Happy
Literally
holidays.
nothing.
Thank
It's
you
like
all for
crickets.
listening. We appreciate it
yeah.
so much. I love getting, the emails from you guys saying that you listen. I love it. I feel like a celebrity, even though I'm not. But again, Happy New Year.
The fact that you have to say you're not
Just want to make sure they know.
You're
priceless.
just being humble, Brendan.
I'm just being
Yeah,
humble.
he's so humble. He's so humble.
But thank you, everybody. Merry Christmas. Happy holidays. Happy New Year.
Yeah. Have a good Christmas, everyone, and we'll see you in the new year. Thank you very much, and profitable investing.
Happy New Year, everyone. See you in 2024.
Happy New Year's, everyone.